Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, August 24th. Hope everybody's getting off to a good start. As always, please run the video at 1.25x. That'll maximize your efficiency, and I don't think you'll miss a thing. It seems to be working really well for people that do that. Taking a quick look at futures. Equities are pretty much green, but barely, about 0.2%. Oil's up 1%. Copper and gold are pretty much flat. Looking at macro today, pretty quiet. We've got Red Book at 9, new home sales, and Richmond Fed at 10. And I think everybody's going to be, primarily focused on Jay Powell at 10 a.m. on Friday. I guess it came out, I don't know if it was pre-market or over the weekend, that the Fed has turned the Jackson Hole symposium into an online event, and because of the COVID, so the market interpreted that like there's no way we're going to get tapering announcement at Jackson Hole if they've basically canceled the whole thing and turned it into a virtual event. So they're probably right. They'll probably push it out and see how it goes into the September meeting. So the market took that as a big positive yesterday, and we got a really strong advance across the board. Diving into the charts, here's the US dollar. We had broken out last week, and then they brought it back in, so we got a little prairie dog here on the dollar. And whenever you've got a falling dollar, that's going to be supportive of the commodity complex, and we saw that yesterday, with copper and gold and oil all making nice advances. And we had been talking last week, just to recap, we were at the low end of the VIX range, down by support. We had that breakout. We had a quick run up to 24.75 at resistance, and then Friday and Monday, they've brought that all the way back into the 17s. Now, just going forward, what you can do is either make yourself a mental note or write down on a sticky note, a post-it note. Your first resistance is 18, and then you're back at 20 again. So as long as we stay below 17 and in general keep falling, that'll be supportive of the market. But if you start seeing upticks and a move back above 18, that would be, I would say, a yellow flag, and then a move back above 20, I would say, is more or less a red flag. Now, when we move along here, showing the oscillators, this last episode was another great example of what a nice job these NIMO and NAMO oscillators do picking reversal points. We had talked about trying to get my days right here. Wednesday it was coming down. It was like minus, I don't know what it was, minus 40. And we said, another hard day of selling. That thing's going to get down into this, start getting down into this oversold zone at minus 60, with the full awareness that it could go further. But then Friday they stepped right in and ramped it higher, and then had follow through yesterday. So again, looks a lot like these other episodes back here, where 60 was a really good line to either bail out of your shorts or start increasing exposure on your longs. And I'll talk to you a little bit more in the charts, but it's not always just this one thing. I mean, I think I put a lot of faith in these charts and these oscillators, and here you can see that it reversed right at the same point. And this is our number of stocks above the 50. Still up here, not great, 47, but at least moving in the right direction. So moving on to the SPY 2-hour chart, and going back the other day, what I wanted to say was we had the NIMO and the NAMO we knew were going most likely after Thursday's selling. Try to get my days right here. I think this was Friday and this was Thursday. And Friday we had the gap down open and they took it down to 436. So we knew the oscillators were extended, is the point I'm trying to make. And we knew that we had gapped down into this well-defined support level at 436. So knowing those two things, at least those two things, should have encouraged or emboldened you to take a stab at this 436, because you knew the oscillators were extended, going to be hard for it to drive down farther, and you were at a key support level on the charts. So when you have multiple things aligning, you can kind of go through that sequence in your head and say, is this an objective place to give it a try? And it turned out that it was. And the thing is, if you did step in here and then there was more selling, you take a paper cut and then you reset and say, I guess they're going to drive it lower. I mean, that's all you can say. You had the 50 EMA right below. So that would have been, if they would have kept selling here at 436 and drove it down to 433, then that whole thing would reset and say, okay, the last time we tagged the 50, we got a massive bounce. We're going to come back to the 50 again. Time to try a long. And that's all you can do. And you hope for the best, but you plan for the worst with your stop just below. And then if your stop gets taken out, then you've just got to, reset yet again. So my point was those NIMO and NAMO, make those part of your analysis. Keep an eye on them, and when they get extended at plus 60 and minus 60, start dialing that in and bring that to the forefront, because that's when those oscillators become actionable. And when that rubber band gets pulled back, usually, the farther it stretches, the more violent the snapback is going to be. So anyways, we had a nice follow through yesterday. We're right back up at all-time highs. Although there's a little shelf here at 447, I think your real pivot is 446, right here at the midpoint of the channel, and where you've got a little bit more technical support here. We do have a little bit of a gap below that at some point will get filled. You guys know how to play gaps now. Expect a bounce off the top on at least the first try. And then if it comes back again, most likely it will go down and fill it. Here it is on the 30-minute chart, much more expanded. We had the gap up yesterday, and very impulsive move. off of the open, and then kind of in the afternoon it got a little bit soggy and they pulled it back here. So you got 447 as a first little level here. But if you lose 447, there's not a lot down here to help support it. So I think you come down to 446 pretty quickly. And then here you got your gap. So notice too that you've got a high level bear PPO cross here, and you're dropping down below 70 on the RSI. So they may want to bring it down here a little bit this morning and see how things react. But as always, just go level to level. And I think 447 and then 446 are the levels to keep an eye on. Big impulsive bars on QQQ. Really right out of the gate, we had a gap up, and here's a little gap below, and then two really big bars, and then in the afternoon, more or less flagging action. Now, let's look at the 30-minute chart. Make me see it here a little bit better. Thinking about how you could have traded it. You're not going to get the gap. That was pre-market. Then it opened. I think if you're looking for objective levels, the break above 370 was a buy point yesterday. And then, if you got in there, then you never had to look, price never looked back. And, you may even still be in it. Whenever it goes that fast, it's more or less a lockout for anybody that was slow on the trigger or, thought about it a little bit too long, because this was your last objective level at 370 on the breakout to new highs. And once you were past that, you would have just been, throwing a dart at any of these candles and hoping it didn't reverse. And so, you had to be kind of quick yesterday and kind of known what you wanted to do. And that's usually how it goes on the open like that. So anyhow, today we'll have to see if this truly is a flag. And if you got a breakout above 374, that would be a buy point. If you got price down at 373 on the low side of the box, you could also say take a long there with a stop just below, from the bottom of the box, and then play for 374 and then a breakout. But if you lose 373 today, what I've done and what I like to do on these big kind of extended moves where there isn't a lot of technical structure is put on your Fibonacci retracements and say, look, where could this pull back to? And so I've got the 38% level at 371.50, and then 370.49, actually about dollar increments it looks like. So we got 371.50, 370.50, and then basically 370 back at these prior highs are potential pullback zones. And, if you got that, if you got a pull into 370, I'd be a buyer there all day long. Why? Because it's the prior high and you've had a nice retracement and that should hold. And I would be willing to take a chance that it would. So that's the breakout and back test scenario that we talk about all the time. So if that indeed happens today, my antenna would be going up as it moves into these Fibonacci zones. And if it made it all the way back to 370, I think that would be a good place to give it a shot. Moving on to IWM, actually outperformed The other two indexes today was almost up 2%. Had a bigger gap up, and then you had an objective place to buy right here as it crossed this level and worked its way up to this next overhead gap. And I've got that here at 218. There was a gap. It broke above there. That was a buy. And then it ended up back testing it and moving up towards this 219.60 area. So I think that's your pivot for today. Above 219.60 opens up this next gap that goes from 220.40 to 221.10, something in that area. But if we go back to this larger chart, the main level remains. Got to get above 224 to really open the chart up, to go up into the low 230s. So right down here was a test of the low of the big consolidation area, remember? And then it has moved impulsively higher off of that low, and now we're just getting back up. If it makes it all the way up to 224, that would be the midpoint of the bigger consolidation that has gone back, really this whole year. So that's kind of where we are here in relation to the big picture. If you're new here, thanks for spending some time with me. I really appreciate it. I hope you're finding the analysis and the levels helpful. I think if you, in your trading, especially if you're new, trust my levels. I'd like to think that they're right most of the time, and then focus your effort on executing around those levels. I mean, that's the one thing I can't do for you. Pulling the trigger on a trade at the right place at the right time, and that's what you've got to work on at your end, your execution. So you can increase your bandwidth simply by taking or having faith in these levels, and then you can execute your trades around those. So hit the subscribe button and the alarm bell. Then you can jump over in the show notes and find a link where you can go to the website, drop in your email, and register for all my content, along with an invite link to our trading group. We'd be glad to have you. And of course, longtime subscribers, I really appreciate your support and you passing along the link to your trading circles. I really appreciate it. So on Facebook here, nice day. Made an impulsive move. Came up here to 364 to break back into this gap area, and then kind of had a subpar close. I was hoping for it to at least hold 364. So anyways, above 364, I think the door is open for a move to 368, then 373 for a complete gap fill. So that's what I see there. Certainly don't want this to fall away too far from 364. And if you're not in it, I would set up an alarm at 364 if this were to move back higher, for you to be able to get along there, along against 364, and hopefully it would have follow through for you. Apple has been respecting these levels pretty well. Came down here on an overshoot. We saw that was a really big line of support. That was a buy on the way back up, and it has been recapturing these levels ever since. Now it has recaptured this 149.50 level, and that's really the last shelf, little support shelf that it has on the way to 151 and breaking out to all-time highs. So hopefully Apple can extend the move and at least come up here to tag 151 at the prior high, and then it'll have a moment of truth to see if it can break out there. Tesla. There was a gap in here that I've since removed. It has jumped up into this lower gap between 705 and 715. Got about halfway and then pulled back. I think it's pretty clear here this morning that 705 is your pivot. I would imagine if it dropped out of 705 that you would get some support at 700, and certainly you don't want to see 690 go, or that would not be so good. But as long as it can hold 705, 700, I think there's an opportunity to go up and fill this gap at 715, and then make yet another run from 720 to 735 to get this gap filled, where over in this area it had posed a really, really big problem. So those are the levels: 705, 715, 720 on the upside as pivots and resistance levels. Microsoft. We got the big impulsive move. We're above 300, and now we are consolidating that big move. I've got alarms at 305 and 303. I think you get a breakout above 305, that'll open the door for the next move. If you get if it breaks down below 303, probably gonna pull back some. But I think as long as the market stays strong, I think there's an opportunity for Microsoft to break out here above 305. And I mean, if you just do a measured move from, say, 296 to 305, I mean, that's 9 onto 303 is 312. So just on that part, and you could actually make a case that the flag is really from down here at 289 on that straight up move, and then that would project more towards 320. So if you're not in Microsoft, I would dedicate a pair of eyes or one eye, or have your alarm set however you want to do it. I think this thing is getting reloaded for the next move higher. Amazon had a good day yesterday, even though it's been soggy here as we've been watching. It had a little gap up. A couple of traders got that yesterday morning, then recaptured 3250, and then moved up to this little gap at 3280 where it ran into a little trouble. So I think this morning, if it pulled into 3250, that might be an interesting place to try a long, or breaks into this gap or recovers 3300. Those would be the levels of importance. And I was talking to one of our new traders, really experienced lady trader that I've become friends with, and she's kind of made a living on Amazon. And we were just talking about it. And one of the things that came up is, newer traders or traders that don't have a lot of capital. I mean, Amazon can be a scary stock to trade. I mean, on a Monday morning, I haven't looked at it lately, but, getting a weekly option on Amazon, those things are going to be $1,100. And if you're just not comfortable with that, or you've got a relatively small, account size where buying something like that makes you uncomfortable. You can paper trade it or not trade it at all, and then jump over to something like the indexes, like SPY or QQQ or IWM, and you can get, very, very affordable options with really, really tight spreads, so you don't have the slippage in and out. And you can hone your skill set there, because if you can trade SPY and you can effectively, get the right entries and exits and work on your execution around levels, then when you're really comfortable with that, and after you've built up your account size to where $1,000 doesn't frighten you, then you can start dabbling with an Amazon. So just because, I'm showing the levels, that doesn't mean you have to trade it. These are just trading opportunities, but you'll have to fine tune if that's an opportunity that fits into your trading well. And if it doesn't, don't feel obligated to trade it, and don't get into that mindset, oh, well, the Amazon guys are making a lot of money, and, my little SPY option here only, I only made $1 on it. Well, it'll come. But there were nice trades yesterday on the indexes. You could have got trades options for 50 cents that closed $2.5 in the money. So that's great when you catch an impulsive move like that and you get in at the right time in the morning. So anyways, and the same thing goes for Google. They're going to be very expensive options. If you're comfortable with it, great. If you're not, then, focus on other ones. But yesterday there was a gap up, gap out of the box. You did have an opportunity if you were focused on it. We talked about a breakout here, and it just kept going and really didn't go look back. Made it up to like 29.20. What was the high? Oh, actually 28.17 was the high right here. And I went ahead and dropped on the fib retracement levels. You can do that on your chart. I don't really have it expanded here. But these are the areas where it could potentially pull back. Looks like 27.85, 27.75, and 27.65 on those Fibonacci pullback targets. And just like anything else, if you get a breakout and a full back test to 27.60, you got to be right there, Johnny on the spot with a long entry on that back test. So, but that worked out really well. And the real setup was right here when you got an opportunity to buy the low of the consolidation range. That would have been a very, very objective long with the opportunity to put a tight stop. And if you bought that, then, all of this was all gravy, because you were profitable from the get-go and you didn't have any candles along the way that would have, shaken you out of that position. So if you got that and were able to ride it for a couple days, you did really, really well. Netflix, speaking of doing really, really well, this has come up and has now filled this consolidation area all the way up to 552.50. Now, what's left is on the daily box. We can look at that real quick. Yeah, here it is on the daily. We've got 560 being at the top of the range. and then we had this little fake breakout at some point. I guess that was earnings way back when, at the beginning of the year, which they faded, and we've had a couple little probes since then above 560, but haven't held. So this is one of those things. Even if you've never traded Netflix, you get a break above 560. That's a place you want to buy with a stop below, because the opportunity is a $90 measured move. So that would be an important place to alarm. Semis had a good day. We were talking about losing that 258 primary breakout down here. It came up, gapped right over it here to 259.50, then just moved up the rest of the day, recapturing 260, recapturing 262. Now we're right here in the middle with 65 being overhead resistance and 62 being support. So if you got to move back to 262 and it held, I would be a buyer there and see if you don't get a bounce back into 265. If you get a breakout above 265, I would be a buyer there on that move as well. Here was a little trade idea I sent out yesterday for those of you that missed it. Dollar Tree has recaptured all of its moving average, including the 200 here, and has moved into a gap that runs from 103 to 109. So hopefully the market stays constructive and this stock can move up to fill that gap there. That would be a really nice result. But look also at, where support was. I mean, when you see this, you kind of know where support is, right? You certainly know if something different happened, if it moved below. And on this most recent tag, there was an impulsive move off of that. And now we're trying to follow through on that into this gap. Night Transportation, KNX, had a little probe yesterday above this 50.5. I had an alarm that triggered. I did not buy it, but I put it back into focus. Maybe next time it will stick, but I'd have an alarm here at 50.5 on KNX. We've got, you can use your imagination below whether you think that's a inverse head and shoulders below or a little cup and handle. This is constructive action below, and what we really need to trigger the structure is, of course, a breakout above 50.5 that holds right here at 50.5. Put your alarm there. There's another stock, I don't have the chart handy, but JB Hunt, similar setup, on the verge of breaking out. You can take a look at that one too and see if you like that one better. It's a more expensive stock. It's up in the 170s. So anyways, that's on the verge of breaking out as well. And I wanted to bring into focus this K-Web again. There were a lot of guys in the trading room yesterday that were dialing in on some red to green reversal candles in these Chinese internet names. I think Baba was down significantly on the open and turned it green by the end of the day. And the same thing with Baidu and JD and all those Chinese internet names. So if you're interested in the basket, we had tried last week on the tag of this trend line to pick a bottom and we got stopped out like the next day. I mean, it didn't take long, but keep an eye on it. And if you wanted to, if it recaptures this trend line this week, and you look at some of the individual, flip through the charts of the components like the Babas and the Baidus and all those names, Tencent and all that stuff, and you like how those charts are shaping up, but you prefer to spread your risk by trading the basket, revisit K-Web, because we are on trend. And notice down here at the bottom, you got like the first green candle in a while. Wasn't big and impulsive, but it was green. So, I mean, you got to start somewhere, and you'll have to figure out if that's going to be your cup of tea to try to get something here at the lows and wait for momentum to build. What I like about this setup is the availability of a tight stop. So you get in here at a little bit over 45. You can look at this low here at let's say 44.50, something like that, and you got 75 cents or a dollar's worth of risk. But if in fact you even get a decent bounce, even a Fibonacci bounce off of this unidirectional move, you put your Fibonacci retracement levels, and I can guarantee you, even at a 38% level, the bounce is going to take it up into the low 60s. So that in itself could be a trade idea. Hey, I'm playing for the bounce, but on a measured move basis, based on the Fibonacci's, that even a minimum 38% bounce is going to be a really, really nice trade. So it's not without risk, because China policymakers can slam these at any time, and that's what they've been doing for the last 6 months. So you'll have to decide if that's something that you want to mess with, or you have better fish to fry. So I'll leave that in your hands. I did want to mention gold, that gold has been sneaking up. Price is right here at right at the top of this box and right at the 200. If you get a break above 169, it's trading 168.73. You get a break above 169, that will have recaptured all of the moving averages, including the 200. And then 169 could be your line to shoot against. And look for a move to 171 at this prior high. And if all the stars align and gold catches a bid, a move up to 174. It hasn't been an easy trade lately. Lots of chops and lots of gaps. But it looks like it's on the upswing again. And while you're at it, take a look at GDX, the gold miners, because they've been lagging the metal, and so those might be ripe for a catch-up trade, because usually it's the other way around, that the miners are outperforming the metal because of the leverage that's involved. So you might want to, if you're interested in gold, do yourself a favor and then look at the gold miners as well. So let's wrap it up here. Let's see how far the rally can take us. Are we going to run all the way to Jackson Hole on Friday morning, or do we have a little consolidation between now and then, or even a pullback? Watch your VIX at let's keep that below 18 to feel really, really confident. And if it moves above 18, have a little air of caution about laying on new long exposure. So hope you enjoyed the analysis. I hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.